So my first question is, what is DeFi? I have to start somewhere, right? So what is DeFi?
Right, of course. Yeah, I mean, DeFi is a word that we really take for granted that most people know what it is, and they don't. And it stands for decentralized finance. And funny story, I went, when I bought my house last year, I had to move some stuff into storage. And so I went to a storage unit. I went in there, and the guy that worked at the storage place, he said, oh, yeah, I've been working here for a few months, and I was laid off because of the pandemic and things like that. And he said, I actually have a background in finance. I was, working in finance before. And I said, oh, you're working in finance? Do you know what decentralized finance is? Do you know what DeFi is? And he said, no, never heard of it. And I was like, man, that's so, even the people in finance don't know what's coming. But it is a massive tidal wave that is coming in called decentralized finance. It's a way that we can do all the functions that we've been forced to do under banks and central banking and lenders and mortgage brokers and realtors and the real estate attorneys and the whole nine yards. We've been forced to do that in a system that, number one, is only having advantage for certain people, but then number two, that's going to get absolutely broken by decentralized finance, because this is going to be those same things done without the need for those third parties. And kind of a great example of this is lending. And there are still some things we got to work out, like decentralized credit scores. That's something where you actually have people that don't have money. That's why they need money, right?
Right.
In crypto,
like the XRP boys.
Yeah, exactly.
sorry, no pun. I pick on them sometimes, man. It's just funny.
The thing is when you think about lending, nobody wants to go to a bank. Nobody wants to, have to put up every single thing that you have for data and information for them to make decisions on. And in cryptocurrency, most of the times when people are taking loans, the reason they're taking loans is because they're trying to take advantage of the gains that they've had in crypto without having to cash out their crypto. And so through decentralized finance, your projects like, Aave and Maker and Compound, you're able to take those loans out, and Celsius as well, and BlockFi, without having to actually lose your crypto. And so you get, very low interest rates. They're not, not super low, 5 to 7% in some cases. You're able to get that immediately. All you got to do is have the cryptocurrency as collateral, and you put it up, and it's all instant. It's all smart contract.
Right.
Nobody's jumping in the middle of that. And that's an easy way for people to understand how decentralized finance works without the third party, because there's nobody to check your data. There's nobody to check to check your documentation, make sure you got your right passport number or whatever it is, or driver's license number. And so that's basically, you can apply that to everything in banking the same way. Now, like I said, in crypto, a lot of people are taking loans from collateral based on the assets they have. We do know there are some things that still have to be solved, like credit scores. There's a project called Smart Credit, and they're actually, tackling that. There's a few other places that are trying to tackle that credit score thing, because, a lot of people that need to take loans don't have money. That's why they need the loan. So, there are some things that still need to be worked out, but we've had so many problems here with the banks lately. Here at BitBoy Crypto, we had our bank account closed down. I actually right here have a check. This check is from my bank, BB&T, that closed our account down. This is the last $102 from the account. Wow. And we're going to frame this, because one day we're going to be worth more than BB&T is. And we're going to remind them of that they shut our account down. Why did they shut our account down? Because I made a Coinbase transaction. Instead of going to PayPal to my bank account, which I usually do, this is a larger transaction for a house, I took the money directly from Coinbase in a bank wire to my bank account. Because of that, they shut my account down. And not only that, they reported me as fraud to, it's a company called Early Warning Signs, or First Warning Signs. It's kind of like a credit score for banks, where they know whether they should give you an account or not. We actually can't even open a bank account now in a traditional bank. We have to go to a credit union because of a Coinbase transaction. Like, that's how archaic this financial system that we have is. Coinbase, by the way, FDIC insured.
Right. So now you have to open up a bank account in a different country, open up a company there, and it's actually simple to get around. They're just idiots, because anyone can do it.
They don't want my money.
They don't want your money. They don't want your money in America, man. I think it's got something to do with the elections. Anyway, so that's basically DeFi. Now, there's different types of DeFi, different types of DeFi projects. Do you want to talk about? By the way, I just had the incredible case of deja vu. Anyway.
Oh, did you?
Yes, like incredible.
Did you see someone talking about DeFi projects?
I saw this. No. So let's talk a little bit about different DeFi projects, because obviously there's decentralized exchanges, and you have oracles, right, that work with DeFi projects, if I'm not mistaken, and so on. Do you want to help us out? Do you want to clarify this a little bit for our audience?
Yeah, I mean, there's definitely a lot of different arenas. I mean, kind of like I mentioned earlier, like Smart Credit. They're doing something trying to get
Right.
Centralized credit scores. You have yield farming projects that are basically ways where you can lock up money and earn a yield on that, and you can farm new tokens. Then you have some that are just basically interest bearing, that are bearing interest, like Celsius has. You're able to do that through Celsius, just lock up your money staking. I mean, also known as staking. So you got different projects that work on that. Then you have other ones that actually provide the loans. Aave, they work on something called Flash Loan. Then you have other projects, one of my favorites. I love talking about this one. I love this project. I don't have any affiliation with this project other than I am invested in it. Synthetics. I love Synthetics. I think it's got the potential to be the number one DeFi project out there, because what they're doing is with Wall Street bets, right? We all saw what happened when kind of David decided to go against Goliath. You know, Goliath being the hedge funds, the big money, David being the normal retail investor. And when they link together, they're actually more powerful than the hedge funds. And we saw what these hedge funds are doing to short the price of companies, and then everything they're doing kind of in the middle to basically bankrupt those companies to make their shorts work so they make money. This is called derivative. This is basically all IOUs, right? Shorting on leverage is an IOU. So basically you're borrowing money from someone who's borrowing money for someone who's borrowing money. And there's actually a $quadrillion of derivatives out there. Some say it's multiple $quadrillion. But some of the lower estimates are somewhere between $500 trillion to $1 quadrillion, which is half of all the money in the world at minimum is basically paper IOUs.
Wow.
The Wall Street bets has proven that we can fight against that. But you're never going to be able to close down a $quadrillion industry, right? We all know there's too much money there. But what we can do is we can get access to that market. And that is what Synthetics is doing. They're creating synthetic derivative versions of every asset out there. So if you live in a country where you're banned from being able to invest in an American stock, you can invest in the synthetic version of that stock. Yeah, they have two different kinds of each asset. They have the synth, which is basically if you want to long the asset. Then they have what they call the reverse synth, which is if you want to short the asset. But you're doing it all on paper, but you're able to make the real gains. And so I think something like that's absolutely huge. And there's so many other projects out there. I mean, a lot of people say Oracle projects are also in DeFi, like Chainlink.
Right.
CoinMarketCap does consider them a DeFi project, where they're trying to bring, it's not just blockchain data to off-chain data. A lot of that is price feed. So definitely when it comes to prices, that would definitely fit decentralized finance. And you know, the thing is, Andreas Antonopoulos, he said a long time ago in his book Internet of Money, which is actually a collection of speeches. It's not really, it's not a book per se. I mean, it is a book.
It's a Bible
written in book form. Yeah, exactly. And he said that he believed that the first application of any new technology that we're going to see in the future is finance. It's money, right? It's money itself. Bitcoin was supposed to be that. Bitcoin is not money. Bitcoin is digital gold. I mean, at this point, most people realize you don't want to get rid of your Bitcoin. You hold it because the value is going up. So Bitcoin actually, in a lot of ways, has not been able to fulfill that. Decentral finance is that dream realized? Is that application of blockchain finance? Crypto and finance, you know, crypto is money. You know? So they're really the perfect meeting place. And so anything in the world of finance that can be done can also be done in blockchain. And, you know, so anything you can think of that fits that description, there's a coin out there that does it.
So why DeFi? Why is DeFi so important? I know we kind of covered it, but okay, why is it important for people watching this channel? Why is it important for investors, speculators, if you will, but also fintech, financial technology, which is DeFi? Why do you think it's important?
Well, I learned something a long time ago. And I actually have a new show called New Money Gang. This is a separate show that's not crypto. It's about showing people, you know, different ways that people are making money online. And it's kind of like the idea of like breaking through the smoke and mirrors of what we're really doing to make money, because we know the biggest way, the number one way to make money on the internet is to tell people how to make money on the internet.
Of course.
Of course. And so you look, there's all these like gurus out there that make these courses, and they sell these courses on like, this is exactly what you need to do to make all the money. And then you're finding out like they don't do any of that. They just make the course. They just made their money on.
Yeah.
The idea here is that the business of money is the number one place where there's money.
Yeah.
And so with DeFi, decentralized finance is the number one sector of money, and crypto a sector completely of money. So when you really look at that convergence of those two ideas, I think I've done this twice on this video, maybe, I don't know.
That's fine.
When you look at the convergence of those ideas, it's very easy to see why this is going to absolutely crush it. It happened over the summer. What I'm hoping is, and look, we learned a lot of stuff over the summer. We learned that there's a lot of projects out there that aren't doing good stuff. And we certainly got manipulated ourselves by some people. There's a big learning curve concern for
Oh, me too.
all of a sudden overnight, all of these projects are just popping out, and some of them are rug pull. This is where we got introduced to the rug pull scam, because now we have decentralized exchanges you don't need permission to list on. It presents the opportunity for a lot of good projects, but also the scam project. And I felt like over the summer, all of us kind of learned together, right? People on my channel learned, I learned, people that were building projects learned. I think we're not going to see that same kind of like scammy side because everybody's more skeptical. And what that means is over this next run for DeFi, I believe that, which we're calling round 2, DeFi round 2, if you will, we're going to see more of the solid projects come to life. And we're seeing it now with Synthetics and Aave. They're absolutely killing the market right now. There will be new projects that come up that are totally legit. I mean, I know there's a lot we talked about on the channel, but I think that, hopefully this is going to be different than what we saw before. And so the explosion is coming one way or the other. It's just, are you going to pick the right coins? I think that's the really important thing to think about.